Let's just touch on this commodity sell-off that we're seeing today, and I'd like to touch on copper because we're seeing a lot of negativity coming through there. What is your sense as to where copper could head from these levels onwards? Again, a very big focus that is coming through from China, and also in terms of what we see out of the US and on the employment front.
Yeah, I mean, it's interesting at this point because, of course, we've got a lot of dollar strength, which is washing through the whole commodities complex. But, I mean, copper's actually held up pretty well in the scheme of things. So most commodities are down pretty sharply from where they were a few weeks ago. Copper's held up pretty well and still within its kind of recent ranges, really, from about 8,200 to about 8,700. So some interesting things going on there. I mean, there's a big disconnect, really, between London and Shanghai. So in London, we're seeing a lot of the nearby dates being squeezed, so the market's in significant backwardation, reflecting low inventories on the LME. And on the other hand, Shanghai is showing rising stock, so there's a big disconnect there. But we think, that the underlying story for copper is still pretty bullish. So the supply side is still very tight. Chinese demand should still grow reasonably this year, and those things have got to work themselves out over the next few months, really.
Well, perhaps one of the biggest points as well, Daniel, is when you look at the FOMC minutes, we know that only 2 out of the 10 members that are able to vote voted for stimulus. The other 8 voted against, and this has been a big factor for the overall commodity basket, it seems. Has this also had an impact on overall sentiment?
Yeah, it certainly has. I mean, I think these kind of things are very important. So we saw the Fed kind of moving away from the prospect of further QE. And on the other hand, the European data has been pretty weak, of course. So that's a kind of perfect environment for dollar strength. So, of course, it's difficult for commodities to do well within that environment. Although, I still think the main thrust of this year will be, dollar weakness and an improving macro backdrop. So I don't think this dollar strength will last for too long, I have to say.
Let's also just touch on what we've been seeing within the gold space, because gold was basically, hanging on the fact that we expected some kind of stimulus. I suppose one piece of good news coming through for people holding gold is the fact that we saw the ECB keeping rates unchanged at 1%, and this is very positive because it leaves the rates low for those that are currently paying to hold gold. Is this also going to have an impact going forward? Do you think it's going to be an interest rate game for the yellow metal as opposed to a stimulus game?
Yeah, I mean, certainly it's a major headwind for gold at this point, and also we've got this ongoing strike in India as well, of course, which doesn't help. So the jewellers there have been on strike for 19 days in a row now, protesting against changes by the government to excise duties. So there's a lot of fears that actually Indian gold imports might drop by perhaps up to 50% in the first quarter of this year. So, dollar strength and lack of demand from India, and also, kind of lack of safe haven flows for gold as well. So, but I actually think gold has held up pretty well given this backdrop, and so, once we see this dollar strength come to an end, then I think there is still the prospect for gold to bounce higher.
Okay, but the truth is, Daniel, that this is just a short-term impact. Even when you're talking on the issues coming through from India, there's still a very high expectation that gold again could actually breach that $2,000 an ounce level. Is it again just pretty much focused on whether we see stimulus or not?
Well, I think, what we're looking for at this point is what's going to be the next big stimulus, really. So, perhaps we've become a bit complacent about Europe, or, but at the end of the day, I think a lot of people still see gold as cheap at these kind of levels. I mean, in terms of the ranges, I think probably 1,600 to 1,800 is a sensible range to look for gold for the next few months. So, I think it will still be the bullishness will come back at some point, but it might take a week or two to get there, I think.
What's also interesting, if we could just go back to the likes of the copper price, because we've seen PMI numbers out of China coming through much higher than most people had expected. In fact, if you take a look at the HSBC number relative to the official number, there is a discrepancy. We also heard some news coming through from the Central Bank of Chile talking about that the export price is going to rise going forward. So this perhaps also a very strong underpin for copper.
I mean, the picture from China is pretty confused. So as you say, the PMIs have been mixed, depending on whether you believe the official or unofficial numbers. And we still have a lot of reports on the ground of pretty weak activity. But having said that, I mean, China is seasonally moving into a period of strength. So often you see the aircon manufacturers restocking as you head into the summer. And you know, China is a very big economy in terms of demand now. So you know, what will happen is we think that you know, the government will re-stimulate the economy. You know, finance will be eased, and you know, Chinese demand might not be as fantastic as in the previous years, but it will still be good enough to keep the market you know, fairly tight and set against the wider supply problems in Chile, Indonesia and other countries. We think that will be enough to keep the market pretty tight. So certainly copper will be interesting to watch, and whether we break out of those key, you know, that key range is going to tell us where the market wants to go to next.
Fantastic, Daniel. We have to leave it there. Thank you for joining us.